Hello viewers, welcome to my YouTube channel at One Raj Kamal. The price market action in the first 2 days of trading activity in the current week has seen a bit of a technical bounce. S&P 500, Dow Jones and Nasdaq all have seen increases. If you look at this chart, which is the daily trading market action on S&P 500, and if you see at the bottom right of this page, you will see that there has been a bounce in the market. I call it technical because it was driven by extremely oversold conditions at the end of last week. However, it is important to note that the close as of Wednesday was weak for all the indices. In fact, S&P 500 went down from about 3,800 to 3,759 at the close, and this decline happened in the last 2 hours of trading action on Wednesday. There was a technical bounce even in the crypto markets. Bitcoin, which had declined to below 18,000 over the weekend, is now back up above $20,000. And ETH, which had declined to about $950 over the weekend, is now back up to about $1,080 at the time of recording this video. So technical bounce in the market in the first 2 days of action in the current week. 2022 has been a particularly tough year for all sectors of the market, and we are probably going to witness the worst 6 months of market action ever since the 1930s. We all know that the major indices have declined. S&P 500 is down above 21% since start of this year. Nasdaq is down nearly 30%, and Dow Jones is down nearly 17% despite the technical bounce this week. Prior to start of this week, at the end of trading activity as of last week, more than 90% of S&P 500 stocks had seen a decline in 5 of the 7 trading action days, and that is unusual. That has never happened before. At the time of recording this video, more than 87% of the stocks are below their 200-day moving average, and this includes the best names such as Apple, Microsoft, Amazon, etc. In fact, a stock like Netflix is down from above 600, which was its all-time high, to about 180 at the time of recording this video. So carnage in some of the best names in the market that we are aware of. If you see a sectoral picture of stocks and see this chart that we are putting up right now, there is absolutely no place where there has been a decline since the start of this year except the energy sector. The energy sector is up 32% for the year, and that has been driven primarily by the increase in price of oil driven by geopolitical actions, especially the Russia-Ukraine war. But every other sector has declined. Look at this chart. Consumer discretionary is down above 31%. Communication services is down more than 30%. Tech is down over 26%. Real estate is down over 23%. Even the safe harbors, safe places, or places where one would hide normally, like staples, is down 9%. Utilities is down 7%. Such is the extent of the damage. The only winner actually is King Dollar. And if you see this chart, you will see that the dollar is at its highest over the last 5 years. Now, this is driven primarily by the rapid increase in the interest rates, especially the 10-year yield, which is now close to 3.2, 3.3%. A strong dollar, however, is a warning signal for the US economy because it makes all US imports more expensive and leads to profit challenges for US companies which have significant businesses overseas. One of the businesses that could get impacted is actually Apple, and if Apple gets impacted, all major indices are down. In fact, I expect there to be earnings revisions downward as Q2 results begin to come out starting July of the current year. The nowhere to hide phenomenon is also there in the crypto markets, where we all know that there has been a lot of damage. Bitcoin is down 55% from the start of the year. ETH is down nearly 70%. And the damage in smaller tokens is even more. Solana is down from about $175 at the start of this year to $35 at the time of recording this video. That's a decline of 80% since the start of the year. Polygon, or Matic as the token is called, is down 81%. Avalanche is down above 85%. I don't even want to talk about the other, 18,000 coins or so that are there in the market. And it's also important to note that these crypto markets started seeing a decline from October, November. So if you go back to the all-time highs, the damage is even higher. So that's what the picture in the market looks like. To sum it up, we are probably on track to see the worst first 6 months of the market since the 1930s. Now, that leads to the last point of today. The Fed Chair Jay Powell was in a testimony to congressional lawyers on Wednesday, and he said that a recession is likely. He also said that a soft landing is going to be challenging. We were talking about exactly that in our last video, where I said that soft landing seems unlikely. There's a lot to cover on the Fed and how the Fed's balance sheet has grown. I will cover that in the coming video. Thank you for joining me today. You can follow me on my Twitter handle at @1RajKamal, Instagram at @1RajKamal. Thank you.